Toronto stocks hitting a record high this morning. U.S. markets under pressure amid this controversy over the Fed. Let's get more from Shiraz Ahmed, CEO of Sartorial Wealth. Great to see you. Now, of course, you take a mathematical quant view of the markets. You're less concerned about things like PE ratios or company debt.
Absolutely. So we do take a little bit of a different stance, given that it is driven largely by mathematics, and a lot of price momentum is our main variables that we do look at. Also, sharp ratios and risk-adjusted return.
Let's just look at the broad markets first, if that's okay.
Sure.
So say, if you look at the TSX hitting a new high today, let's put up a 10-year chart, for example. What pattern are you seeing there?
Right now, still strong positive momentum. And this is something that we talked about a few months ago as well. Canada is coming off the back of probably the best year in 15 years that we had in 2025. So that being said, the momentum is carried into January so far. And it looks as though, at least in the short term, due to some of the geopolitical risk out there as well, that Canada being such a commodity-heavy country, we're still seeing some of that positive momentum.
What about the U.S. market? Maybe we can put up the S&P 500.
So the S&P has had an okay year last year, but relative to Canada, it's not been quite as well. Right now, given some of the geopolitical concerns around, for example, Venezuela, there's talk about Greenland and whatnot as well. There is a little bit more concern, I think, from a geopolitical risk standpoint. So that's why we're seeing a little bit of enhanced volatility happening in the United States. But I'd still say the story is far from over for the U.S.
What about a market like the NASDAQ 100, using that as a proxy for the tech stocks? I mean, it is still down from its record high, which was at the end of October.
Yes. So again, while we don't look at that indice directly as much as we do some of the broader ones, what's important to remember about, especially the story is so specific to AI right now. If you actually take out some of the major AI names, a lot of these indices are flat, if not negative. So that being said, it's not surprising that the NASDAQ 100 is showing that it's down, given that there was concerns about valuations, they were being a bit stretched, and there was some profit taking that happened in the fall.
And emerging markets, they thrived last year. A lower US dollar can be good for emerging economies. Are you seeing momentum there too?
Yes, we have. And last year, for example, that was one of our bigger winners, is the fact that we did pivot and shift to quite a larger stance in international markets. Outside of North America, frankly, did better overall. So we were happy to do that, and some of that currency pickup also helped quite a bit.
Let's get to some stocks that are attracting your attention that you think hold promise right now. ASML, it's a big provider globally of semiconductor equipment. What attracts you to this stock?
So they have a bit of a monopoly on their EUV technology. So the fact that they make the tools that a lot of the semiconductor companies use is really interesting for us. And again, while we're not so much into the fundamentals, given that we're a quant shop relative to a lot of our peers, we like ASML as a name, given that it does have a bit of a moat around it, to quote Warren Buffett, relative to a lot of other securities. And again, the momentum has been quite strong. So we do like ASML as a name overall.
Another name, very different, is Cameco. Obviously, we get headlines about planned nuclear investments pretty well every day. And the stock, it may be at a new record high today. It's certainly close.
Yes, and again, it's been on a tear for the last little while, which is part of the reason why our momentum screenings have favorably picked it up, and we've had a participating holding in it for quite a while now. The percentage will obviously jump up and down depending on a lot of variables, but we like Cameco as a name overall. And again, this is a bit of a play on the AI story as well, but mainly due to the power side of AI. So if you're looking at the data centers, they do need power, with a lot of the governments around the world wanting to have cleaner energy. Nuclear is definitely one of the options, and Cameco is a great way to play that name.
So, yeah, I'm showing a record high of Cameco just above 152 in October, but it's 151 right now.
Absolutely. So it's held its own, strong positive momentum. Again, with Canada's, commodity-based economy, this is, I think, a name that we're going to likely see coming into the headlines over the next little while.
It's interesting. I mean, that electricity trade, not sure, maybe we could put up CEG, Constellation Energy, or VST, south of the border. Those stocks had momentum last year. Are you still seeing promise there in those big electricity generators?
Yes, so I think overall, and there's a huge push towards getting power to the data centers. I think that is really the challenge overall. They've had positive momentum. There may be some volatility that perhaps would be security specific and not necessarily macro to the overall sector, but I do think that the sector still has a lot of legs left.
And Uber Technologies, this one, it ticks some boxes for you guys.
Yes, and one of the reasons why we like Uber is it is becoming a little bit ubiquitous now. So similar to how nowadays people think tissue paper, they actually think Kleenex. Similarly, rideshare Uber is becoming ubiquitous with that as well. It's a name that we like, and the reliance on continuous cash infusions is becoming less and less. It's actually becoming to be a profitable company overall. So it's a name that we like. It is screened well and has positive momentum at the moment.
And you reckon, I know this is something you pay less attention to, but the forward PE at around 24 times, you reckon is reasonable anyway?
Yes, it's again attractive relative to if we look at what some of the AI players are at right now, which ridiculous valuations. This is one that we like and we think is sustainable.
And compares favorably, you reckon, to DoorDash, a big rival in delivery.
Yes, DoorDash and even Lyft as well. They just seem to have a bit more power relative to their peers, and it's a name that we like.
Shiraz, thanks very much.
My pleasure. Thank you.
Shiraz Ahmed, CEO of Sartorial Wealth.